In this video, we look at the performance of the metals and mining sectors in large TSXV stocks in 2023. Canadian Mining Report is not a financial advisor. This video is for informational purposes only and does not constitute investment advice. Only 3 of the major metals rose substantially in 2023, gold, iron ore, and uranium, while the others ranged from near flat to heavy declines, with cobalt, nickel, and lithium seeing the biggest losses as they continued to reverse from big spikes in 2022. For equity markets, US large cap tech was the big outperformer, driving up both the Nasdaq and S&P 500, and the Russell 2000 US small cap index and European stocks saw decent gains. The mining stocks underperformed, with the largest global producers at mid-single digits, in line with emerging market stocks, and the TSXV junior miners were down substantially for the year. This saw the Nasdaq and S&P 500 price-to-book valuations at 6.6 times and 4.4 times move far above other major markets, which ranged from just 2 times to 1.5 times, while the mining sectors traded near the bottom of global valuations, ranging from about 1.4 times to just 1.6 times, other than the standout lithium at 3.1 times. Such an extreme spread between the tech bullishness and mining bearishness suggests a rising potential for the valuations to eventually converge. For the TSXV, the gold and silver sector price-to-book valuations have contracted after a surge in 2019 and 2020, back to pre-boom levels of just 2.1 times and 2.2 times. Copper valuations have come down only moderately, and at 2.8 times are still well above 2018 levels. And lithium sector valuations at 7 times have remained well above the other sectors for the past 3 years. For gold, the single biggest driver this year was a spike in geopolitical risk, which had been subdued from 2010 to 2020, with the geopolitical risk index averaging under 100. However, it spiked after Russia's invasion of Ukraine and has remained relatively elevated since, averaging 143 over the past 2 years and reaching its high for the last year at 202 in October on the Middle East crisis. The other big macro trend affecting all the metals was the continuation of aggressive interest rate hikes from 2022, which brought down inflation from highs near 9% in mid-2022 to an average of just 3.3% over second half 2023, just above the US and EU central banks' targets of 2%. This affected gold through 3 major channels. It drove an increase in real yields over most of 2023, which is generally a negative driver for gold, although they did ease near the end of the year. It led to a weak dollar index for most of the year, which tends to be good for gold, and stopped plummeting M3 money supply growth, which while still negative, is gradually heading back to positive territory, with a rising money supply an upward driver for gold long term. For the larger TSXV gold stocks overall, it was a good year, with 3 of the 4 developers seeing decent market cap gains as they advanced their respective projects. 2 of 3 explorers saw major market cap gains on strong drill results. 2 stocks were driven not by operational gains but by progress in arbitration cases, which could see them eventually receive large cash payouts, and the only company in full production saw a market cap decline. With the silver price near flat, 2 of the 4 large TSXV silver stocks made only slight gains, although 2 also saw major gains, one a developer with a large resource upgrade and one an earlier stage explorer with outstanding drill results. The 2 major platinum group stocks were mixed as the underlying metals prices declined for the year. The larger TSXV base metal stocks also shook off the weaker metals prices last year, with 2 out of 3 copper stocks seeing substantial gains. The 1 tin play near flat, a huge gain for 1 nickel stock on strong exploration stage drill results, and a decline for the other with a project further along in development, while there were moderate gains for the 1 zinc stock. Although half the larger TSXV lithium stocks declined, as could be expected given the plunge in the metal price, half the group still made solid gains with offsetting operational progress. 3 out of the 4 larger TSXV uranium stocks were up, driven by the surge in the uranium price, by far the best performing major metal last year, with even the 1 underperformer near flat for the year. For more information on the metals and junior miners, click the link in the description or bio below to go to www.canadianminingreport.com.